morning, everyone. We're now live, so we'll start the July 29th Deferred Compensation Advisory Committee meeting. It is 10:02. Donna, will you take the official roll?
Yes, Ms. Hopkins.
Present.
Mr. Wilverding.
I'm here.
Ms. Babb.
Here.
Ms. Calkins.
Here.
Mr. Keoka. Ms. Miller.
Here.
And Mr. Woolcamp.
Here.
Thank you, everybody. We'll also ask our guests to identify themselves. Tammy, would you like to go first?
Sure. This is Tammy Matuska, Employee Benefits Manager for San Joaquin County.
Jason Morris, Deputy County Counsel.
Donna Strange, Human Resources.
If our others can identify themselves, I think, David, you're on the line.
Hello, I'm David McCrae. I'm the local education representative for Empower.
Georgia Ferguson.
Hi, everyone.
Oh, go ahead.
Go ahead, Georgia.
Thanks, Dario. Hi, everyone. Georgia Ferguson. I'm a customer experience strategist at Empower.
I think I heard another voice.
So this is Daria Gomez from Empower, lead a team of relationship managers, and I am representing Robert Gleason today since he's out of the office for a couple weeks.
Thank you.
Right.
Vincent, are you on the line?
I am. I'm having problems with my camera, but I don't know if you can hear me okay, but I can see everybody. So
We
thank
can
you
hear
for.
Is there anybody else on the line that we haven't identified?
Dan Morrison.
Hi, this is Dan Morrison, also with Empower Retirement.
Thank you. And Sheena, can you confirm you're also on the line? Sheena is here. She replied virtually.
And I'm here too, Brandy, Kathy Harris, HR.
Thank you, Kathy.
Hi, Kathy.
I asked you, they gave me this cute little iPad thing, but I'm trying to figure out how it works, so bear with me today, everybody. Okay, thank you everyone for joining us for the meeting today. Our first agenda item is an action required item, and it's the approval of the minutes for the quarterly meeting of April 29th, 2021. If the committee members could take a minute to review the minutes, and then if we can have a motion or answer any questions if there are any.
Hello, everyone. I got a new computer. I'm not sure if I can hear anybody. Could you guys say something?
Hi, CJ.
Can you hear me, Jason? Raise your hand. All right.
And we can only see the top of your head. Okay, there we go.
Excellent.
That's those new computers. They'll do it to you every time.
I don't think he can.
Fonse, can you hear us at all? That's a negative.
Think we lost them.
Speaking of losing, I don't know if you can see me, but my camera seems to have froze. I am definitely not sleeping. It looks at my end and I'm nodding off, but I'm quite here and awake.
I'm sending him a little message, but it says that he left the chat, so he might have gotten kicked off. Okay. Are there any questions regarding the minutes from the committee members?
Hearing none, I move to accept the minutes.
Second.
Can I ask who had that second?
Nancy Hopkins.
Thank you. Okay, we'll take roll call vote. Ms. Hopkins?
Yes.
Mr. Wilverding?
Yes.
Mr. Keoka? Okay, we'll come back to that. Ms. Miller?
Yes.
Mr. Wolkamp?
Yes.
Okay.
Don't see him.
Mr. Keokum, were you able to come back?
Yes, I am here.
Okay, we're taking a vote on the minutes.
Oh, yes.
SJCDCAC public comments at sjgov.org.
At this time, there's no public comments.
With no public comment, we'll move on to our next item, a program status report from Empower.
So this is Dario from Empower. I believe we have roughly 15 to 20 minutes to cover this item. We'd like to start by having Dan Morrison, our Senior Vice President of the Government Markets, provide a quick update. So Dan, why don't you take it away?
Good morning. Thanks for having us on the meeting today again. We appreciate you for that. I'm going to cover 3 topics before I turn it back to Dario and David to cover the customary plan review. I want to give you an update on the Mass Mutual acquisition. We had an announcement last week that I wanted to share with you, and then 3, give you some just government highlights from our business. So I'll start with the Mass Mutual update. Just wanted to let everybody know, making great progress. We are on schedule with everything that we have planned for. We're getting very good feedback from sponsors, from intermediaries, from the marketplace, from associates. So far, both associate retention and client retention is better than we targeted. So we feel very good with the progress to date. We feel very good about the plan forward. Reminder, beginning of the year, we did welcome nearly 2,000 employees from Mass Mutual to Empower. We, again, have had very strong retention. That's critical to our success forward, as this is a relationship business. So we've been very focused on retaining your talent and hopefully continuing to serve you at the highest levels. So as we've discussed, I believe at the past meeting, we do have considerable experience bringing plans onto our system. Once we bring your plan onto our system, you will immediately see the benefits of an elevated plan sponsor experience, an elevated participant experience. Georgia is on the line today. She's going to introduce you to those experiences a little bit later this morning. As for the migration itself, we're going to start to migrate plans in September, and we will do migrations over a number of waves. Ultimately, all of the plans for Mass Mutual will be on the Empower record-keeping system by October of 2022, so it'll happen very quickly. Currently, San Joaquin scheduled for January. I know you have a number of factors, you have decisions to make. We are going to work with you, so we'll cover that at another time. Know you have flexibility in the migration. There are considerable benefits with the migration versus a traditional record-keeping conversion. To highlight those, it's done over a weekend, so you avoid a lengthy blackout where participants are out of market. We avoid that altogether. We do maintain history, so we keep that. And then for this team and the administrative staff, it's considerably simplified. The number of steps are very few versus a traditional conversion, which gets pretty involved. At the end of it, you will, over a weekend, migrate to a very modern plan sponsor and participant experience. So we look forward to that transition. So that's Mass Mutual. The next topic I wanted to cut, and feel free to ask questions if you have them. Last week, Empower and Prudential announced, actually it was on July 21st, that we've entered into a definitive agreement for Empower to acquire Prudential's full service retirement business. So I've spoken with a number of clients and industry professionals. So far, the feedback has been overwhelmingly positive. I've heard several sponsors comment that they feel good to be with Empower and the commitment Empower is making to the business. I hope all of you feel the same as you get to know us better in the coming months and hopefully much longer than that. The acquisition, it's going to add significant expertise, much like the Mass Mutual acquisition has, a broader set of capabilities to Empower's existing business. It'll also drive scale so we can continue to reinvest into our business. The acquisition does include more than 1,800 employees that we'll bring over. So don't we have staff coming to support that. There will be no disruption whatsoever to your plans or to your staff as a result of this. If the transaction says nothing else, please know that we are very committed to this business. We're reinvesting constantly so we can innovate, drive better outcomes with your participants. And government is a core and growing focus for us here at Empower Retirement. And then the last topic that I just wanted to touch on briefly is our government business and give you an update. As a reminder, we serve a number of governments around the country. We have about 150 billion in plan assets, public plan assets that we administer in DC plans. Couple of updates from our business. So we have a very formal engagement model with our customers where relationship managers, client service managers, advisors out in the field or educators out in the field are expected to have a minimum number of touches with the various contacts that our customers. So far this year, we've had thousands of those events completed. We formalize that, we track that. We think that leads to, or is one of the reasons why our customers have historically said that they are very satisfied with the services we provide. We just completed our annual Empower Retirement Government Client Satisfaction Survey. We had over 88% of our government clients respond. And in 2021, our sponsors continue to report a strong experience and directional improvements in areas. Some of the highlights, 93% of our government clients are very satisfied, and they've said that we're easy to do business with. We maintain a world-class Net Promoter Score. Some of the strengths, it's our customer service, it's our people, the website, technology, account security. I do believe that high satisfaction leads to two things, which is good for business and ultimately good for serving all of our plans. First, retention. We have very strong retention. We're almost 99% for the year in our government business, and new sales. So we have 94 new government sales funded or committed for $5.5 billion in plan assets. So 3 topics very quickly. I just wanted to give you those highlights. Again, happy to answer any questions, and if you have questions, I'll take those. Otherwise, I'll turn it back to Dario.
Are there any questions from anybody on the line? Well, thank you, Dan.
Thank you for the time this morning. We appreciate it.
Thank you, Dan. So I'm going to go ahead and share my screen to show the quarterly plan review report. So bear with me a second here. And if I can just get maybe a hands up that folks are able to see it.
It's up.
Perfect. Again, the report has not changed in structure or in format from the prior quarter, so I will not be covering this cover to cover, but just know that the information is obviously for second quarter 2021. My time will be focused here on the executive summary to provide you some highlights and trends that we saw quarter to quarter, and please feel free to interject if you have additional questions on the information I'm covering or otherwise. So one thing to note, assets did grow from the prior period, almost 27 million for the end of the quarter. That was mostly due to consistent growth in your investment options with over $25.6 million, and also consistent contributions into the plan. You saw participant contributions increase by 12% quarter to quarter, as well as employer contributions increased by 15%. Of note, though, you'll also notice that distributions out of the plan, there was a significant uptick. There is a legend here that describes what withdrawals, terminations are. Obviously, loans are self-explanatory. But in total, as far as distributions coming out of the plan, excluding loans, there was an increase from $8.3 million in first quarter to $14.9 million of distributions. There were a number of factors that likely led to that uptick. The first is, though we increased participant count by a net 30 participants, that included 124 new enrollments for the quarter, there were 156 participants that went from being active participants to terminated. So typically more participants retiring or changing jobs leads to increased distributions. There was also a significant uptick in death benefits for the quarter. We traditionally see roughly about 200,000 on average for death benefit claims per quarter. This quarter was close to 1.7 million. So that also attributed to the increase in distributions out of the plan. And then lastly, rollovers out of the plan were also up. And I will cover those in detail in the rollover out report. Questions on that so far? All right. Hearing none, I'm going to move to the participant statistics. Again, just a couple of items of note here. I mentioned earlier, total participants, 6,328. That is a net positive of 30 participants. I also mentioned that contributing factor to that were 124 new enrollments. A trend here that I've noticed is that terminated participants have increasingly gone up or increased over the years. I went back to 2017. The total terminated, retired, or other status participants, non-active participants, were 1,649. Today, they're at 2,318, so roughly a 40% increase. So that tells us that, again, in the government market, and specifically in your plan, participants do tend to stay in the plan, but I do think that there's some improvements that we can work on that, and I'll cover those. The only other item to note here is your loan program. I understand that that's fairly new, that it came out with the CARES Act that was rolled out, I should say. We did see some increase there from 63 active loans to 107, representing about 2% of your participants with a loan. For comparison purposes, similar plans like yourself, but with a mature loan program that's been around for many years, we typically see that figure between 10 and 15%. So take away from that is that, one, you likely will continue to see some growth in your loan program as far as participants participating in that, but you're, as of today, well below a benchmark there. Any other questions or any questions on that particular topic? I'm going to move to the rollover out report, and then we'll move forward with this particular report here. This is a traditional report that we put together for you on a quarterly basis. This is specifically distributions that resulted in a rollover out of the plan. As I mentioned earlier, this was a significant factor in the total distributions. We did see an increase from quarter to quarter. Last quarter was $5.1 million of total distributions that resulted in a rollover. This particular quarter, we saw that increase to $11.7 million. Now, you will see that there are a number of different firms. The top three that receive rollovers by assets were First Fidelity, roughly $2.6 million. Pershing came in second at $1.4 million, and then TD Ameritrade at $1.3 million. So again, this is likely because your participants are looking for either a feature that's not available within the plan, or looking for additional services as far as the managing their account. So that's why I do want to highlight a couple things. One, you'll see some distributions as well that resulted into the Great West Trust Company. This is part of our retirement services group, our RSG group. You have a version of that today, but there's a more robust version of this on the Empower platform. We know that in the government market, a stated goal for many of our clients, if not the majority, is keeping assets in the plan. Helps total assets grow. One of the strategic goals of this team is to have discussions with all your participants as a distribution is requested, to clearly discuss all the available options and actually lead with, hey, did you know you can stay in the plan? That's an option. If you're looking to take regular distributions, you have the ability to do that within the plan. And we've actually done a number of case studies that when we fully deploy our RSG services, we've actually seen a significant drop in, one, distributions that result in an IRA rollover, we've seen that decrease from up to 55% in, again, a number of similar plans like yourself, and also a decrease of about 22% of just normal distributions in the plan. Now, what does this RSG team do in addition to just talking about the available option? We also have the ability to provide fiduciary point-in-time advice. Again, this is with enhanced services that will be available to you post-migration, so that we can make sure that a participant not only makes an informed decision. The most common question we get is, what should I do? If you were me, can you actually tell me what to do? We have the ability to do that with fiduciary advice and making sure that participants are doing the right thing for themselves. The other thing that these retirement consultants within this group talk about is making sure we do what's in the best interest of participants. At times, if there is an opportunity for a participant to say, you know what, I've already talked to an advisor, I want to do a comparison of if those fees are actually competitive. We have the ability through a loyalty program to offer a comparison through our Empower IRA service. And that's what these 6 or 7 Great West Trust Company IRA rollovers are. When a participant asks for their available options and say, hey, I'm looking to distribute my assets, we have the ability to offer this. And actually want to highlight that with an example of one of these participants. He called in and said he was fully disabled and was looking to distribute his entire account balance. The participant, retirement consultant, talked to the participant and said, here are your options. Just know that if you do distribute your entire account, there may be some tax ramifications here. You may want to talk to a tax advisor, as well as we will be required to withhold 20% in advance in tax withholdings. The participant, talked about alternatives and saying, hey, I still need some assets, but I'm likely going to be in a much lower tax bracket because I'll be fully disabled. Is there a way to avoid that? An IRA option allows a participant to take a distribution without the upfront withholding. Though taxes may still be due at the end of the year, the participant has the flexibility. So again, some of those options there help a participant make an informed decision. So I'll pause there. Any questions from the committee?
Dario, this is Fonse. I do have a question. You have a couple of participants that left. I guess one left with 1.5 and another left with about $1 million. Are those numbers, I wouldn't say accurate, but it just seems like outliers. It just kind of jumps out at me.
That is actually a really good point. They are accurate. That's one of the reasons this particular quarter you saw an uptick in the total distributions. There were a couple of very large distributions. The largest one was from a participant that had been retired for a number of years. And again, they went to Fidelity. One, to confirm these numbers are accurate, and they just happen to come into this quarter. They typically do not go to that level of size looking at prior reports.
Correct. I'm thinking about how much someone would have to contribute in their earnings and how long they have to leave it in there to make 1.5. It's just kind of, again, it's...
Those individuals had worked at the county for over 30 years. For the largest few, they had worked here and contributed. They tried to max out the majority of their career and invest aggressively. So it for 30 years, yeah, it's a lot, but it's pretty consistent.
Okay.
Any other questions from the committee? Okay, so I'm going to pivot back here to David. He's going to give you a quick update of his activity on site that's also in the report, as well as future strategy of servicing your participants and employees.
Thanks, Dario. To reintroduce myself, even though everyone knows me, I am the education consultant for the county. I rotate between all the departments and educate employees on how the plan works, how the different investment options work, different saving strategies, and of course I'm attending all new employee orientations and retirement seminars and things like that to explain how that process works, to encourage participation in the plan and encourage using the plan appropriately. So in the past, prior to COVID, it was all on-site meetings 100% of the time. And we were able to pivot very quickly in March of 2020 to doing virtual meetings only. And the employees here, they really reacted well to that. There wasn't a big decrease in people reaching out or trying to do some kind of meeting. So before it would be, I would show up on a location on site and I'd be there for 6 or 8 hours and employees would come in. And now same thing, I'm just sitting right here and they're attending a Zoom or a Teams meeting and they're getting that same kind of information. Q2 of this year, if you can see at the bottom of that page that we're on, we had virtual individual meetings. I had 19 days in Q2 where I sat in front of my computer and just employees, one after another from this department or that department that I coordinated with, employee scheduled meetings to talk to me about whatever their retirement questions were. And that totaled about 185 people. That number is a little bit lower than what on-site meetings tend to be, but this has been pretty successful to do virtual meetings. I'm able to capture a whole different group of people that aren't able to get away from their desks, or maybe they wanted to talk at 5 in the evening or something like that. So working virtually that way has been pretty successful. However, I've been aware for the last couple months that for some departments, virtual meetings do not work. Places like the sheriff's office, it's very difficult for them to find time out of their day to do a virtual meeting or download the Zoom app, and they would be talking to me on their phone in their car or something like that. That was very challenging for them to have a good meeting with a lot of good content. So I've been trying to reach out to different departments to reschedule in a safe and healthy environment for departments that definitely need on-person use. I'm slowly going back into that. I'm coordinating with the departments on the best way to do that, but that's still moving slowly. That said, I really think that these virtual meetings, this is a big success. This is a lot of people that are able to just sign up, talk to me about something, and then go back to work without trying to hunt down what room I'm in or find which day of the week I'm at what location. It's really easy to have this virtual meeting link that anyone can attend. So I'm still going to have this virtual meeting available, and I'm slowly working on finding the right departments that probably did not receive a lot of education over the last year. And I've been trying to slowly schedule on-site stuff with them, making sure it makes sense for the department. And of course, I would wear mask and everything else. But overall, this year, for the first 6 months of the year, just under 1,000 people, 958, attended a group meeting that I gave in some kind of capacity, talking about the retirement plan, and just under 400 attended an individual meeting where we talked specifically about their goals and needs and concerns. So are there any questions about that?
Thank you,
All
David.
right.
Are there any questions about program staff? I don't know why we have feedback. My apologies. We'll move on to the participant and plan sponsor, the website mobile app demonstration from Empower.
Yeah, great. Thank you so much. So hi, everyone. Once again, my name is Georgia Ferguson. I'm a customer experience strategist here at Empower. Today, I'll be walking you through those enhanced plan sponsor and participant experiences that you'll be getting when you do migrate over. So let me just share my screen here. Bear with me for just a moment. I thought that we would start off on the plan sponsor side of things. I'll just do maybe some quick hits, and then I will flip us over to the participant side. So for the plan sponsor, we've really built it to be two different buckets for plan sponsors. First, from more of a strategic standpoint, and then secondly, from more of a day-to-day administration standpoint. So let me start off on that strategic bucket. So this is our landing page right when you come into the PSC. Here's where we're able to give you all of your plan data in a number of different buckets that you're seeing on screen. And from there, we're actually able to then benchmark. And so we benchmark against the companies that are in the top 10% of your peer group. And then it really allows you just to see how that data is broken out, whether it's by the lifetime income score, which I'll get into in just a moment, by contribution rate, or by participation rate. There are a number of other buckets that you can get into, but for Dario's standpoint, he will likely really live in this part of the experience. It's called our plan analytics section. So here is where we're taking that data and we're now trying to bring it to life. So you have these 6 different buckets that you're seeing on screen, and we can measure your plan data by contributions, investment strategy. If folks are in managed accounts, by web statistics, we can show you whether they're jumping on through the desktop or through the mobile apps, or even from a tablet. And then we can also break it out by participation rate, as well as this lifetime income score bucket you're seeing here. So our lifetime income score, it's a key differentiator for Empower. We were the first to market with this about 10 years ago, and we give a participant their own individual lifetime income score. And so that basically tells them how on track they are to their goal in retirement. I'll show you what that looks like on the participant side of things, but we then take all of those scores and we aggregate them up to give you a plan lifetime income score. Most relationship managers think of this as their overall plan health. And so if we were to click in to that lifetime income score, we can then break down this information even further. So you see that right now we have it broken out by age range. We can also break it out for you by gender, by salary range, tenure, or even by primary grouping. So this could be by job location or job code. And then if you go to this employee details section, a heat map will then emerge. And so each dot on this heat map represents a participant within the plan. So say Dario, Robert, come out here. They're working with your communication strategist to push out a specific campaign around our communication. Maybe it's for all of those people who are under the 50% threshold for their lifetime income score. All they have to do is highlight those dots, and then at the bottom, a list of names will populate. From there, we can export this data and then execute on either that education strategy using David or that communication strategy, leveraging your communication strategist. So that's just one way as to how we're really able to break down your plan data. Are there any questions on the strategy side of things before I just show you a couple quick hits of our more administrative side? I'll take silence as no. Okay, great. Oh, Chrissy, I think you had your hand up.
Yes, are we supposed to know their names? I thought this was supposed, I don't know that we're supposed to know their investments. I mean, personally, just asking.
Yes, no, great question, Chrissy. So we will provide individual access to the HR members who are going to be a part of this more strategic side of things. So you as just a committee member will not be able to see likely all of this access. It's more for the folks who are the benefits analysts, the HR managers, so that they can see it. Okay, great. And so from here, just a few day-to-day items. First, we have the file sharing section. So here is where we're able to pass secure documents between your team and the Empower team. So we basically break this out into different buckets here for you. We have an auditor folder. We're able to also provide another level of individual access into this file sharing. So say you do have an auditor coming, they'll have access to just that auditor folder. Same thing if maybe you have a payroll clerk, we could always give them access to just this payroll records bucket. But it's just allowing us to be able to pass those secure documents back and forth amongst each other. And then we do have a robust reporting section. We have over 100 standardized reports that you can run on your own if you'd like. But the great thing here at Empower is that we do meet our clients where they want to be met. So if you want to self-service, you want to come out here and run those reports, you're able to. But if you do want your client service manager to take that off of your plate, they're happy to run those reports for you. We once again break them out into different buckets so they're easy to find. You could always search by a name and everything will pull up. And then you do also have a My Favorites and Most Frequently Used section. And if you do have any reporting that you want to run on a reoccurring basis, you have the ability to. You can see the frequency right here, whether it's daily, quarterly, monthly, weekly, and those will populate for you on that frequency. And then lastly is the ability to search for an employee. So what you'll do is come in here and you can search for that employee by first name, last name, employee ID, participant ID, or social security number. And once you click in, we were very intentional with building this part of the site. So we wanted to make it as easy as possible for you as a benefits analyst or benefits manager to find out everything that you need to know about Alex Smith without having to go multiple clicks deep. So here you can see his date of birth, social security number, his plans that he's in. It'll just be a small drop down. You can also see any account detail in here, whether it's deferral percentage, where they are year to date versus the IRS limit, their total account versus vested. You can also see transactions, beneficiaries on file if they have any loans outstanding. And this interactions box is very popular. And so here is where you can see any interaction that this participant has had with Empower. So whether they're calling in, inbound, outbound, whether they went to the web, or even if we send them a mailing, a lot of times we hear that, you know, the participant might walk into your office or call you virtually and say, I got a letter from Empower, but they don't always have it on hand. You're able to click in and actually pull up that letter and then have that discussion with that participant. And then lastly, along that same line, we want individuals to feel comfortable calling in to our call center if they have any questions in regards to the website. But if they are in your office or they give you a call, you have access to the employee web. So it's a web emulator where when you click in, you will see the website as the participant sees it. So this is a non-transactional site. You will not be able to take that action for the individual, but it just allows for that conversation to ebb and flow much smoother between you and the individual. And our call center has this exact same capability for when a participant calls in. So now that I've covered the plan sponsor, are there any questions specifically for that? If not, I will jump us over to the participant side.
When is this all gonna, is this the one that's gonna happen in January 2022?
Yes, yeah. Okay, great. So let me flip us over to the participant side. This side always gets me a little bit more excited. So the moment that a participant logs on, this is what they'll see. This is our landing page. And we've really built our landing page to be our planning tool. So we know that every provider out there, of course, has a planning tool today, but research has told us that 90% of participants who log on to their retirement website never actually leave the first page. So that means if our planning tool was one click deep, only 10% of your participants would go and find it and use it. Instead, here at Empower, 100% of them are able to interact with our planning tool because it's the very first thing that they see. And so I do want to take a moment. I understand that today you have paper for deferral changes as well as paper enrollment. But for the purpose of this meeting, I'm just going to show you all of the functionality that our website has, just so you can see all of those enhancements. And so naturally, a participant's eye is drawn to this 72%. It's called our lifetime income score. Like I mentioned, we were the first to market with this. It tells Kelly that percent that she is towards her goal in retirement. And so we've built it to be very simple on the front end for the participant, but it's actually pretty sophisticated on the back end. So if Kelly clicks into that number, she can see a little bit about what that number is made up of. We pull in all of that indicative data from your payroll file about each individual. From there, we put Kelly at a 75% income replacement rate. She can move this number up or down, adjust as she sees fit. 75 is just always where we start her at. From there, we break it out for her into estimated monthly income. We do that because most Americans budget on a monthly basis. But right next door is where she can see her total account balance, as well as what we have pulled in on a plan level. So for illustration purposes, I have your 457B plan as well as your 401A listed. I understand that you also have Aviva. And so we'll work with your provider to pull in that VIBA on a frequency of your choosing so that it can be included in the total account balance, in the lifetime income score, as well as the different income sources that my cursor is moving across. So here, Kelly can see her savings. She can see an estimate of her Social Security benefit. She can always come in, modify these assumptions, include or exclude, but we do always provide her with that estimate. She can also add in other assets. So I am going to put a pin in this section for just a few moments. We have some great enhancements coming around this bucket that I'll be showing you in just a couple moments. But all of it leads to this income gap, and we make that bold, we make it red, we want her to notice it. We then encourage her to close it by providing a next step. So you can see that we're telling her, why don't you consider increasing by 1% to get to that goal? If she wants to take that step, all she has to do is slide this slider, and you can see how things are filling in up top. So that's the emotional side of it. Feels good to see that impact. From the analytical side, we do the math for her, show her future income, and then also the trade-off today so she can make a smart financial decision. At this point, we just want to get out of her way, so she'll click Review Changes, submit your change, and she's done. So in just 2 clicks on the very first page that Kelly interacted with, she was able to take that action and increase her lifetime income score. We're seeing tremendous results here. 45% of participants who engage with these sliders make a change, resulting on average a 43% lift. So I will pause here. What reactions do you all have to this landing page?
I think it's nice. I think it's a improvement to what we currently have.
Well, thank you. We do try to make it as easy as possible. Oh yeah, go ahead, Catherine.
I love it. I think it's great. I think it's easy to understand. I think the fact that you're seeing 43% of people actually make these changes is indicative of how it's being received by people. the biggest gap that I know from talking to other people with their retirement is they really don't grasp how much they're going to need versus how much they currently have and what that's going to mean to them at retirement. Most people get within a couple of years of retirement and they are like, oh my God, I'm not going to have enough money, or I'm going to have to scale down my lifestyle so much. I'm going to have a miserable retirement. So I'm going to have to work for 5 more years. I mean, this really gives people at a much younger age the ability to map this out and figure out where they're at. So I'm real curious to see about this other assets bucket, because I mean, you know, this is a specific plan with the county. Most people do have at least one other bucket, and their spouse, if they're married, may have other buckets as well. So I'm really curious to see how this will all interact so you can really get the full picture.
Georgia, this is Fonse. Is there analytics in the back? Again, I've always been curious, you know, hey, I put in X amount of dollars, how much of that is my dollars to start with, and how much did I earn over the course of my years? Is there anything that kind of shows that?
Yes. So I appreciate the question. We do run a lot of analytics in the background. So what we're doing when we pull in that data, we also pull in the individual's actual investment allocation today. From there, behind the systems, we're running probability scenarios based on data dating all the way back from 1946 to the present. So everything that we're doing is pushing out the most accurate projection possible for this individual based off of the information we know about them. And then if you do click into this estimated monthly income goal, I just did, you can see where the breakout is between current savings as well as our projections are projecting out those future savings. Does that answer your question?
No. Again, let's just say, for instance, I put in 10,000 every single year for the last 30 years. You multiply, multiply 10,000 by the 30 years. I accumulated X amount of dollars there, and I'd like to see, well, out of that 300,000, how much? Actually, let's say 400. Let's say it is 400,000. You know, again, I just wanted to determine how much did my investments make over the years, and how much did I contribute towards that.
So that 80,000.
Dan, do you want to jump in here?
For instance, if you're looking at that account balance, it's 80,000. Well, if I contributed 75,000 of it, you know, again, my investments, I didn't do very well. But if I only contributed 50,000 or 40,000, then I'd say, hey, you know what, that's the plan itself or the investments itself did very well. Again, I'm just looking at it from an accounting perspective.
Yeah, you're looking for the cost basis. So on the right, there are a couple links you can go into details and see more of the traditional view of contributions, earnings, individual investments, those types of things. So the more traditional view that you're used to seeing is there. To George's point at the start, most people land on that first page. They see those big numbers. That's where they stay. But certainly all of that that additional detail is there and at your fingertips.
Well, actually, you were leading me to this page anyways. So this is the account overview page. Like Dan said, you can get all of that, all of those details right in here, whether it's your balance, annualized rate of return. We lay out for you what your 2021 contributions are year to date versus the IRS limit. And so we do lay that out for individuals. And then on this left-hand side, they can do any other, transaction that they're looking for or administrative side of things. Specifically, just wanted to highlight for you the ability to add in a beneficiary. So they can come into here and add in a beneficiary right here. It's super easy for participants to do. Once they click continue, they're able to stick that in there. I'm not quite sure why it's not showing up on the website, but we also have the ability for a participant to add in a contingent beneficiary as well. Might just be a small tweak there for the demo. But aside from that, I do want to just show you maybe 2 other features, and then I'll flip over to those other assets, Catherine. So first is what we call our healthcare cost estimator. We know that healthcare is the #1 expense in retirement. We want to help participants see their whole financial picture. And so here we lay out for Kelly how much she's estimated to be spending on healthcare. So we break it out for her in insurance premiums, additional out-of-pocket costs, and she can take this age slider and slide this. See how it impacts how much money she's spending as she ages. And this does assume that she's in good health. If she clicks in, she can personalize this, choose any of the top 6 health conditions that have an impact on mortality and medical expense, and then also let us know where she wants to retire, because we do know healthcare costs vary by state. So we pull this in from Health View Services. They're a top aggregator based out of Boston, and this is private to the employee. You can see a small note written right here. We do not provide any of these customizations to you as a plan sponsor. You will not be able to see them. But if Kelly does want to add in anything, all she has to do is click update. Everything in the site updates in real time, and then you can see the sliders follow us. Once we, motivate a participant to take an action, we want them to be able to do so right where they are. And then for individuals who are over the age of 50, this screen will populate for them called How Long Will My Money Last? This was based off of participant and client feedback that basically the accumulation phase is of course very important, but so is the drawdown strategy. So this serves as an educational tool for participants to start to think about, how should I be spending my money when it comes to that time frame? And so here they can hover over each of these bars, see what the breakout is when it comes to their savings, and click into the age and model different scenarios. Maybe they need that money to last for a longer or a shorter period of time. They can do so right here on the site. And so do you all have a need for Spanish translation today? I'll just look for some nods.
This is Tammy. We're currently not utilizing Spanish, but we were looking into adding that in the future.
Okay, great. Thank you very much, Tammy. So for those individuals, they are just one click away from a fully translated Spanish website. So we really took the time to invest and build this site once it populates here for us. We really took the time to do this. It's not a microsite. We also didn't use Google Translate, and it's because there's small nuances when you're translating from English to Spanish. Not all of those words automatically translate over using a machine. So we brought in the human touch, actual linguists, to translate this experience so that those employees can transact in their primary language. We have this available in both desktop as well as a Spanish mobile app. A couple other things will trickle down from there. They'll receive statements in Spanish, ability for communications, as well as if they call into our call center, they can speak with a Spanish-speaking representative. So from here, I know I have about 4 or 5 minutes left, so I just want to flip us over to show you a teaser of some enhancements, those outside assets. So let me get over there. Let me orient you to the page before I get into the enhancements. So you can see that we've made a couple cosmetic tweaks. These enhancements are rolling out in just 6 short weeks. Our very first clients are going live with it in September, and all of our clients will have these enhancements by spring of 2022. But we moved the Empower accounts over to the left-hand side. We did that because we actually learned participants' eyes are naturally drawn to that side of the page. So we made that small tweak. We also moved the Spanish translation up to the top of the screen. makes it easily accessible for those individuals who want that as their primary language. You can see right now it is Empower branded. That is purely because we're in a demo setting. It will be your brand, not only across the web, but also all other communications. And then you can see that the core of the experience, what I just showed you, the ability for a participant to take an action, see their lifetime income score, see that estimated monthly income goal, that's staying front and center because we know it works. Where we're enhancing is really around two buckets, personalization and financial wellness. So first, that personalization bucket, we are now taking personalized communications where we talk to a participant on a one-on-one basis, and we're embedding them within our website. We learned that individuals are 6 times more likely to be engaged if the message is relevant to them. So this individual doesn't yet have a beneficiary on file. That's the message that we're pushing out to them, always getting them to take their best next step. And then around financial wellness and that other assets bucket, we've started to introduce this idea of net worth. So here is where an individual can see their assets and their liabilities. Right now, they just have those Empower accounts linked. But if they do want to link an outside account, they're able to. They'll come into here. They can choose from any of these top financial institutions, or they can enter in their bank name or URL. And once they go through that, they'll go through just a quick authorization and click link. Now that I've clicked link, I want you to see how the experience is starting to transform. So this individual has added in multiple accounts on that left-hand side, investments at TD Ameritrade Cash, credit cards, mortgage payments. Depending on what they add, their financial dashboard will populate down at the bottom. What we found is that 70% of participants said they need help managing their finances. If we can't help them with a budget or an emergency savings today, then can we really help them with those longer term retirement savings goals? So now they have the tools at their fingertips on budgeting, cash flow, debt pay down, all the way through to emergency savings. These will be clickable for individuals. Say they want to get into that budgeting widget, they're able to. Here's an illustration of what that might look like. We're pulling in that data from those outside accounts and now showing them trends, where they're spending their money versus their budget, maybe how they behaved or misbehaved that month. And then we, of course, break it out for them into easily digestible buckets. And lastly, you can see how that net worth has now enhanced, giving someone a 360-degree view of their money right up top. So I know I said a lot probably in the last half hour. What reactions do you have to these enhancements before I hand things back to Dario?
I
Catherine,
personally,
do you think that this would be leveraged? Oh, sorry, go ahead.
sorry, I think this is awesome. Honestly, this is what's kind of expected. I have other accounts, and to pull that data in, not only the mortgage data but also the home value. I'm assuming it's adjusting monthly for it to actually show the net worth. That is great. I'm not sure if you mentioned this or if you touched on it, but does this also incorporate the employees' retirement, the county retirement?
Yes. Yeah, it will. Just because we're in that demo setting, it says ABC account, but they'll be listed right there.
I'm talking about more of the pension itself.
Yes, you can add in that information as well. You can manually add that in or pull it in using that other outside, using what I just showed you by linking accounts. And
then one last question. Is it possible to get it in before January, or is it just that's kind of the time frame you guys have right now for us?
Dan, I'll let you take that one.
Yeah, I'll take that one. Again, I know you have a number of things going on, decisions to make. We do have some flexibility to with that timing. So if you're passionate to do something earlier, let's just have the conversation and figure out what that looks like. We obviously want to do a thorough communication to your participants and make sure that everybody's informed, not surprise anybody. So, but we're happy to have that dialogue. We we want to make this easy for you and ultimately get this great experience to all of your participants.
I have a question. Will this also
Yes, hi,
include?
Chrissy.
Okay. Will this also include the health and reimbursement plan that Empower is also taking over? So it'll show as a separate
Yes, it
line
will.
item. Pardon me?
Yep.
Okay. Thank you. That's going to be interesting to see. Kathy mentioned it last time. Sometimes there are just pennies sitting there, and I'm just wondering if that's even looked at. You know, why are pennies sitting in these accounts? But that's something you'll see, I'm sure. Okay, thanks.
You're welcome. So with that, Dario, I think I'll hand things back over to you.
Yeah, actually, those were our prepared comments. Again, we're extremely excited to present the information here in the quarterly meeting. We're happy to answer any additional questions, whether in a committee setting or from the administrative staff as we have future discussion. We appreciate the time, and we'll hang around if there's additional questions within the committee meeting.
Hi, this is Tammy. I just had two questions. For the Social Security, how is that determined in the process? Are you pulling from people's checks for that, or how do you know that they've been in Social Security the whole time, or is that something the participant puts in?
Yeah, Tammy. So we take that estimate from the Social Security Administration Quick Calc, but the participant can always go in and modify or adjust those numbers. We just provide the estimate. Mm-hmm.
And the other question I have is some employees, county employees, get an employer contribution towards their deferred compensation. Is that separated out from the employee's contribution in this program?
Yes, it is, Tammy. They will see another line item as employer contribution. We always want to highlight, that for our employers, that they're contributing to their employees' financial future.
Great, thank you.
Are there
You're
any
welcome.
other questions?
Appreciate the questions.
Are there any other questions for Georgia? Thank you. Thank you very much for the presentation. We'll move on to our quarterly performance review for the second quarter of 2021 from the highest group.
Great. Thank you very much again for the opportunity to present. It has been a very, very interesting time in the economy, certainly given everything that's going on with the pandemic. I will touch briefly upon some leading economic indicators, but before I do, can everyone see the second quarter report? I shared my screen.
We can, Vincent. It's
okay,
up.
great. So let me go ahead and skip over some of the narratives on the market and economic overview until I get to these charts. And some of you may be on smaller tablets or phone devices, so I'll go ahead and expand these. One of the leading economic indicators that I typically touch upon is the gross domestic product. This is the chart on the upper left. GDP, or gross domestic product, is essentially a measure of our economic output, and this black line is the dollar amount of all the goods and services produced in the United States. And historically, a healthy economy grows anywhere from 2 to 3%, and that's what we've seen over the last decade before the pandemic. And you can see, thanks in large part due to some shelter-in-place orders throughout the region as well as globally, GDP shrank dramatically. In fact, it set a modern era record in terms of the contraction of GDP, but also thanks to large amounts of federal stimulus, as well as some warming summer months. And let's not underestimate the power of the Federal Reserve through low interest rates. The economy has since snapped back rather handily. In fact, I don't know if you heard, but the second quarter GDP number came out today at 6.5%. That was followed by, that followed the first quarter at 6.3%. So 6.5% is pretty good from a historical standpoint. The trouble is most economists were expecting about an 8.5% print for GDP. So healthy, but not as good as expected. But still, very, very good. We are at somewhat of an inflection point in the economy. As I said, we have historic low interest rates thanks to an aggressive Jerome Powell, chairman of the Fed. But we're also seeing large amounts of stimulus starting to come or siphon off. But to add to that, we're seeing a growing amount of COVID viruses, or at least infections with the Lambda and the Delta variant. So it'll be very, very interesting to see what the rest of 21 looks like in terms of the economy with even more shelter-in-place orders. The unemployment rate, you can see I'm now moving to the chart on the upper right. The unemployment rate ticked up to about 15% in the depths of the pandemic. It's since settled back down. Nationally, it's about 6%. There in the county, it's a little bit higher at 9%, but still relatively healthy locally as well as nationally from an unemployment standpoint. I think the biggest potential issue is inflation. Certainly prices are going up anywhere from housing to groceries to energy. The latest read, the CPI or Consumer Price Index is about 5.5%. When you strip out food and energy for volatility reasons, it's about 4.5%. But either way, it's about twice the expectation from the Federal Reserve. So there is a certain threat of the economy overheating, at least as measured by this inflationary or Consumer Price Index. So again, some interesting times ahead. Really, what does that mean with the markets? Moving down into the next page, I do want to highlight the bond market because with a lot of the optimism around the vaccines and economies going back to normal, rates have ticked up. Since then, back to my point about some of the dark clouds gathering on the horizon, rates have ticked back down. And bond math states as rates drop, the value of existing bonds go up. And so we've seen a nice rally in the bond market as represented by this second line here, the US aggregate. So you can see the aggregate for the quarter up almost 2%. But if you take a look the year to date, still negative 1.6% as of quarter end. I did take a look as of yesterday, the aggregate is still negative, but it's negative only 0.6%. So nice recovery with rates decreasing on the longer term. We saw the 10-year Treasury drop from 1.7-ish% to about 1.2-ish%. So nice decrease. And for anybody interested in refinancing their mortgage, now might be a good time, thanks to lowered interest rates. The stock market continues its rally, whether it be despite of the pandemic or thanks to low interest rates and a large amount of federal stimulus. The next page has the domestic stock market. Most people use this index, the S&P 500, as a barometer of our United States stock market. You can see 8.5% for the quarter, bringing that year-to-date number to 15.25. As of yesterday, the S&P 500 is up over 18% year-to-date. So phenomenal rally in the U.S. stock market. And then last but not least, the international markets are represented by this index. Next page is the All Country World Index, or the ACWI. We call that the ACWI. There are about 45 countries outside the US with an investable market. That 9.2% year-to-date number has come back down a little bit due to some of the softening of the international economies. That year-to-date number as of yesterday for the ACWI is 6.5% to the positive. So still nice return, but not as good as the number in the book here as of quarter end. So I'll pause. Typically, there's some questions or comments about the economy or market, so I'll take a breath, entertain any questions from the committee. Okay, hearing none, I'll go ahead and skip to the next section. This is the 457. We bring that down a little bit. This is the broad menu that participants can choose from in the 457 plan. All the investment options are listed here, and they're grouped by asset class and then ranked generally in risk order. And so you have 5 of the more conservative fixed income funds underneath this green header box. You have some funds that invest in large companies, some invest in mid-sized companies, some funds invest in small cap companies. 2 funds invest in those international markets that I talked about. Target date funds are right here. And then the specialty funds, whether it be real estate or gold and special mineral. And then rounding out the bottom, you see the self-directed brokerage assets and the loans. And then total plan assets are about 528 million. Just as a point of reference, a few years ago, this plan had about 385 million in it. So significant growth thanks to strong market cooperation. Any questions here? All right. Taking a look at this particular chart, and we've talked about this on a regular basis. This reflects a lot of the figures that Dario was talking about and Bob before him in previous meetings. We do take a look at the cash flow. It's laid out a little bit differently, so I just want to highlight this, but briefly. For the quarter, you can see cash flow going in to the tune of about 6.8 million. And these are all the contributions, roll-ins. So not too bad, just under $7 million for the 3-month period. But take a look at this, almost $16 million leaving. And so from a math standpoint, you can see 9 million on a net basis negative leaving the plan. And that brings the year to date at 12 million. And like I said, Dario did a good job explaining really where those numbers were coming from and where those dollars were going. But just something to keep in mind, similar to what the advisory committee has been doing for the last several quarters. But this is that reference that I was talking about. At the end of 2018, the plan had $385 million in it. Take a look, despite some negative cash flow, the plan has grown thanks to these market gains, and they're significant. The average account balance end of the period, just under $85,000 here. And then you can see some committees like to see how the plan did just on an investment basis, 23.5% for the year and 5.1% for the quarter. Shifting into the 401A plan, this is the same menu, obviously different asset allocation and asset size. This plan at the end of the quarter had $25 million in the particular program. A little different cash flow characteristics here. You can see $500,000 going in, about $750,000 going out for the period. So it was net negative for the quarter, but you can see strong cash flow in previous periods and then significant market gains. Ending 2018 at just under 14 million. And then the average account balance, again, given different demographics, obviously different average account balance, just under $180,000. And then this plan returned just under 30% last year. And then moving into the investment policy statement compliance report, given where we are in this economic and market cycle, there is one fund that's continues to be on watch. This is the American Beacon International Equity. You can see it's violated the performance metrics. Initially, it was placed on watch given significant manager change. If you recall, there are 3 sub-advisors, and American Beacon replaced one of those sub-advisors. And then this fund, the Wells Fargo Special Mid-Cap Value, this fund recently was announced that Wells Fargo Asset Management would be spun out and bought out by 2 private equity firms. And given the significant ownership change, we placed that fund on watch for qualitative reasoning. The good news is, as the news has matured, it's been about 6 months, we have seen not only no changes to the structure or the portfolio, but also we've seen no departures. What we typically see in a significant ownership change with money managers. So for all intents and purposes, really, really good news coming from this particular fund. But we'll like to give it a little bit more time, maybe a few more months to see, and hopefully the performance of this fund recovers and the dust settles with that significant ownership change, and we can remove these 2 funds on watch. But for now, leaving them in the plan, leaving them on watch is our recommendation. I'll pause, see if anybody has questions, comments on that. Okay, really no issues. I can certainly go through this next section, a lot of data points. You can see a lot of numbers. But basically, this is all the performance of each individual option, the performance of the underlying index or benchmark, and then the peer group rankings in the grayed out rows expressed as percentiles. But as I said, there are some fund managers that are doing very, very well, some managers that are doing well. But if anybody has questions on any of these, I can certainly pause and address those. But short of the two watch funds, no real issues. Okay. Moving into the fee section, I'll be brief as I round out this report. Essentially, MassMutual / Empower charges 9 basis points on the admin fee. That's for paying for plan-related expenses, most notably the record keeping and consultant. But you can see from a fiduciary standpoint, all the fees that the fund managers charge and how this page is laid out are all the investment options here on the left-hand side. The assets in the 457 here, the expense ratio, this is what the participants are paying to the fund managers. Here's that 9 basis point administrative tack-on fee. And you can see on an annualized basis, participants are paying roughly $2.5 million, $2 million going to the fund managers, about $500,000 going to plan-related costs. And you can see the accounting here. Of this $475,000, $300,000 is going to MassMutual / Empower, and then $170,000 is being retained by the plan. And then similar story with the 401A plan. Empower is collecting this 9 and then rebating about $8,000 to the plan. And the accounting obviously is similar format, just different asset sizes. I'll pause, see if anybody has questions on that section or the report in general. Okay. Hearing none, thank you again for the opportunity to present the second quarter performance report.
Thank you, Vincent. Vincent, you have a highest grade update for us this morning?
Yes. And now that I stopped sharing my screen, I see that my camera is frozen yet again. Good news is it doesn't look like I'm sleeping anymore, so I won't try and fix this. But the update is such that about 2 weeks ago, we announced a partnership with Morgan Stanley. So in other words, Morgan Stanley agreed to purchase Highest Group. And so behind the scenes, there will be significant ownership change, as well as significant enhancements, not only to our research capabilities, but also to our technological as well as risk mitigation standpoint, whether it be data security, anything like that. And so we're really, really happy for those things. But really, for the county, 99.99% of the things will not change. The team will remain intact. In fact, there's incentives for us to stay on board, as well as a pledge by Morgan Stanley that they are not going to change anything. And so really, it's all status quo, in large part on your end. The name Highest Group will remain. We will remain as a separate legal entity, and unless you have any choice or any say, the team will remain intact, and everybody here is committed to making that happen. I'll pause on that. Yeah.
Thank you. Are there any questions for Vincent about this change?
Yeah, this is Jay. I just have one question, and I know I asked it in an email when Vincent announced it, because my first concern was that he would not be our advisor, which I'm glad to hear that you will continue to be our advisor. You mentioned 99% of the things will remain unchanged from our perspective. So in a year from now, Vincent, what might we expect as we're going through a meeting like this? How similar or dissimilar do you anticipate what you're doing for us might be?
Good question. I think the 0.001% thing that will change might be the way we invoice the county. Again, it's our tax ID number will stay the same. The name will stay the same. We might have a different chart or two in our performance reports. If we change it, it will be a collective discussion around enhancing, not change for change, but it's going to be around the edges. I'm reluctant to say 100%. It'll be very, very minor changes / enhancements if we do amend anything. So those are the only things I can think of, but everything else will be status quo.
Okay, that would be great. Thank you.
Thank you, Jay. Are there any other questions for Vincent? Vincent, I think we are all glad you will remain with us. We appreciate everything that you do and all the support that you provide.
Thank you. You unfortunately can't see me smiling and nodding, so thank you very much for those words.
We're going to move on to our next item, which is the status of our deferred compensation record keeper RFP, and our benefits manager is going to provide a verbal presentation.
Thanks, Brandy. Can everyone hear me okay? Okay. So to ensure that I don't break any procurement rules, I'm not going to give any details on the RFP process right now, but I do want to ensure that the committee is aware of where we are at on the timeline for the RFP process. So the deferred comp record keeper RFP was released on June 18th, and we got proposers submitted questions, and highest, the county, and procurement and HR responded to those questions on July 9th. And then the proposals were due to the county on July 22nd. We're going to be having a subcommittee that's going to review the proposals, possibly do interviews and demonstrations sometime between before November, and then the award is expected at the end of November. And then, of course, we'll have a new contract by April of 2022. So I just wanted to provide that information to the committee, just for their information.
Hey, Tammy, it's Jay. Yeah. Quick question. Who's on the RFP committee?
Jay, you may recall it's you, our tax collector, Tammy, and myself.
Okay, thank you.
Well, Vincent here to provide us guidance as well.
All right, perfect, thanks.
I stuck that in there on your calendar, but I did tell you.
Okay.
Tammy, before you go forward, I just want to remind the committee members, while the RFP is outstanding, in the unlikely event anyone is solicited, if anyone is asking you questions, any of the potential proposers contact you, do not engage and refer them back to Tammy and the benefits division here at HR. It shouldn't happen, but it occasionally does in the retirement context, and it certainly could here. So just a reminder in that regard.
It's a great reminder. Thank you. Very much so. Are there any other questions for Tammy? Okay, thank you, Tammy. We're going to move on to our next item. This is about the Deferred Compensation Advisory Committee election for a participant representative and an alternate participant representative.
Yes, thank you, Brandy. I wanted to make sure that everyone on the committee was aware that the county has an election for the employee/retiree participant every 2 years. Every 4 years, we elect 2 members. So that's the participant and the alternate. So in 2021, it's going to require us to do an election for 2 participants. While Christine Babb will still continue until 2023, Nancy Calkins and Terrence West, who is our alternate, this will be their last year. So effective 2023, we will have 2 new members along with Chrissy. So I just wanted to make sure that everyone was aware of that. There's a very detailed process on going through this election. And so we are going to do an initial mailing for self-nomination in September. Once the candidates are determined, a second mailing with a ballot will be sent. And then at the end of October, the ballots are due. Once the ballots are received and counted, the participant and alternate will be determined, and a board letter will be submitted and presented in November. And then the new members will start in January of 2022. So does anyone have any questions regarding that process?
Okay, well, thank you, Tammy. Our next item is regarding National Retirement Security Month.
Okay, and this is just going to be very, very brief. As you know, October is National Retirement Security Month, and the next time we meet as a group is at the end of October, so I just wanted to make sure you were aware that this month is coming up. We try to do a pretty robust campaign. Unfortunately, the NAGDA, the National Association of Government Defined Contribution Administrators organization, their campaign is like 3 or 4 years old, and we didn't think it was that good to have that same campaign. So we are working with Empower to do a new campaign, and they are doing a great job of providing us. I actually received the draft materials yesterday, and those materials are, I haven't even really had a chance to review them too closely yet, but the theme is going to be next move, and it's going to be focusing around games. And so we're looking forward to working with Empower to actually do this campaign this year. Does anyone have any questions regarding that? Great, thank you, everyone.
Thank you, Tammy. Well, we're now on our other business agenda item, or if any member of the committee has other business that they would like to bring forward at this time. Okay, hearing none, we'll move on to our final public comment check.
No public comment.
Okay, we do not have any public comment, final public comment, so we can go ahead and end our meeting. It is 11:28. Thank you, everyone, for your participation today. It's very valuable and helpful. Have a good day.
Thanks, Brandy.
Thanks all. Bye-bye.